market. As we all of us are aware that stock market is one of the very strongest backbone for our nation. We need to learn each and every nook and corner about this. So we are feeling very much privileged to welcome our guest of the day, that is our resource person, Dr. V. Aditya Srinivas. Sir, we welcome you from the core of our heart for the session.
Thank you, ma'am. Thank you so much.
Sir, Dr. Aditya Srinivas is COO of Bombay Stock Exchange Brokers Forum. Sir has a huge experience which he's going to share with us very soon. And today, we also feel proud to have our student council head, Dr. Assistant Professor Advocate Sunil Shah, sir. Sir, we welcome you also. And here we begin with the session. Thank you very much.
Thank you, ma'am. Thank you very much for giving this opportunity. I really thank S.S.T College of Arts and Commerce for making this thing possible. Today, friends, knowledge is power, and the whole objective of doing such sessions is to give good amount of knowledge to today's student, because today's student is tomorrow's investor. So without taking much time, we will begin the session, friends. See, friends, today's topic is very, very interesting. It is basically related to stock market. See, as far as stock market is concerned, or whenever we hear the word stock exchange, stock market, the word Bombay Stock Exchange comes to our mind. See, BSE was formed on 9th July 1875. So we have already completed 147 years. Huge time, friends, the exchange has completed, and that is why today it is called as a barometer of Indian economy. In fact, the original name of the exchange was Native Share and Stock Broker Association. That was the original name of the exchange. Now here, if we see, friends, the word Stockbroker Association comes into picture because that was the brokers played a very critical and a vital role in ensuring that basically brokers were the one who formed, run and managed this body. That time the membership fee was only 1 rupee and there were 318 members. Remember, friends, membership fee, you may feel that what is 1 rupee, but see the date 1875, 1 rupee was a princely amount. In today's scenario, the membership fee ranges from 10 lakh rupees to 50 lakh rupees, and there are around 1300 main brokers who are registered. See, as far as investment methods are concerned, there are two important methods of investment. One is a direct method, one is an indirect method. Direct method basically means that you will open your trading and demat account and will invest through a stockbroker. That is called as a direct method. Indirect method basically means you invest in a mutual fund, and mutual fund will invest that money into the markets. So both methods are important, and both methods have their own plus and minus. Nevertheless, friends, different people will be comfortable with different kinds of methods, direct method also and indirect method also. As far as investments in capital market is concerned, friends, 3 types of accounts are compulsorily needed if you want to invest primarily in stock market, whether it is Indian stock market or any market abroad. You need a trading account, a demat account, and a savings account in a bank. Here, friends, trading and demat account both basically go hand in hand. Both are interconnected and both are opened by basically a broker only. So that is why trading and demat account go hand in hand, and savings account is one which is there in your normal bank account. So all the three are the prime thing which are required to trade in a capital market. That means for investment in stock market, you need all the three. As far as, friends, the procedure and the documentations is required, that how do you open these accounts, that basically the following documents have to be submitted. PAN card, which is an identity proof, Aadhaar card, which is an address proof, Aadhaar card, driving license, voter ID, passport, and bank statement. So basically what happens is that these 3 things are most important. Here one has to keep one thing in mind, friends, that your name, spelling, and nomenclature on all the 3 documents should be the same. Then only basically the broker's KYC department will process your account. That is something very vital. In case if there is any discrepancy, then in that case, the broker's KYC department will reject, and you will have to submit again the documents with the rectified one. So that is again something we have to keep it in mind. Here, the whole purpose of taking bank statement is that whatever bank account details you give, that particular account will be mapped, will be linked with your trading and demat account. So that means when you buy shares, you will make payment from that bank account, and when you sell shares, you will receive money in that bank account. So that is why all the three are interrelated. Use of trading and demat account, if we try to figure out, friends, then this is something very important, because a lot of people get confused between the use of trading and demat account. See, basically trading account is actually used to buy and sell the shares. That is something very, very vital. So here what happens is that in case a code is generated, see, when you submit all the documents, the broker will open your trading and demat account, and in both the accounts you will get a code. Say for example, as we have our savings bank account number, obviously there is a trading code which is there in trading account, and obviously a 16-digit your demat account will be there. So basically in trading account, the actual buy and sell transactions take place. For instance, I want to buy 10 Reliance, so I will call the broker and he will punch the transaction of 10 Reliance in my trading account. On the other hand, once I make the payment for those 10 Reliance, the shares will be transferred to the demat account. So demat account is one where the shares will be permanently stored. See, once my shares enter the demat account, then basically those particular shares will always remain there till I again sell it. So demat account is used for storage of securities. Friends, both accounts are interlinked and are opened by the stockbroker. Even for opening up of a demat account, friends, the documentation required is basically the same: PAN card, Aadhaar card, bank statement, and passport size photo. In fact, friends, in today's current scenario, when you are submitting one set of document, the broker will open both. The broker will open your trading account also, the broker will open your demat account also. So basically what will happen is that both kinds of accounts will be opened by the broker, and that plays a critical and a vital role. Here, friends, we have to keep one thing in mind, that as far as this documentation is concerned, today if you are doing an offline account, offline means you are you are going to the broker's place, signing the documents and opening the account, then in that particular case your account will take around 3 to 4 working days. And if it is an online account, you are submitting these documents online, then within what we can say 2 to 3 hours your account will be opened and one can start investing. Friends, actually, eKYC has really changed the game. See, during COVID-19, we all are aware that physical meeting, physical interaction was not possible. Hence, SEBI came up with the concept of eKYC, electronic know your customer, whereby opening up of demat and trading account was basically possible by sitting in your drawing room. This facility of allowing eKYC led large number of investors come into the market. In fact, many first-time investors, friends, were able to invest in the capital market only because of this initiation by our capital market regulator, SEBI. Here, friends, we have to keep one thing in mind, that as far as SEBI's eKYC is allowed, this particular initiation really helped to increase the number of retail investors in our stock market. For instance, you will find that before COVID, friends, before COVID, you will find that there were this thing, what I can say, 5.23 crore, 5.23 crore number of demat accounts. But today that figure has crossed 12 crore. And thanks to this initiative, which actually brought large number of investors in the market. How exactly trading and demat takes place? See, once trading and demat account is opened, the client will call the broker or the sub-broker. So basically, the client will tell the trading code in which the transactions can be done. Remember, friends, that here what happens is that once the transaction is done, the broker or the sub-broker will get the confirmation. See, when you do a trade, the broker will get a confirmation from the client, will get a confirmation from the broker also, as well as from the stock exchange also. So that is why there is absolute clarity. Not only that, friends, but here one has to keep in mind that whatever communication happens between the broker and the client, it will happen through registered mobile number and registered email ID only. So both are primarily interconnected. That is something we have to keep it in mind. See, primarily speaking, friends, when anybody enters the market, for example, when my demat and trading account is opened, when your demat and trading account is opened, there are two important opportunities that one has to keep it in mind: intraday trading and delivery based trading. See, intraday trading basically refers to buying and selling of shares on the same day itself. That is called as intraday trading. Remember, friends, in intraday trading, the risk and return are absolutely on a very high side. One can make quick profit, but at the same time, the probability of losing big amount is also very high. And that is why, friends, intraday trading is something very critical and vital. Here, friends, one has to understand that as far as intraday trading is concerned, friends, stop loss mechanism is very, very vital. You have to keep proper stop loss, then only one should trade in the market. For instance, if you are incurring a loss of say 1,000 rupee and your capacity is to bear a loss of only 1,000, then one should immediately square the trade. Usually people incur huge losses because when they are getting loss, they don't cut the trade and rather they keep waiting for the price to correct, and that is where they incur huge loss. So in intraday trading, basically your ability to cut trade in a loss is very, very vital, and that is what is called as a stop loss mechanism. In fact, friends, as far as delivery based trading is concerned, friends, here the entire payment is made by the client, not one or two, but the entire payment is made by the client, and then the shares are transferred to the demat account of the client after the client makes the full payment. Friends, delivery based trading is relatively more safe and secure because here the shares are lying in the demat account of the customer, and that is why, friends, delivery based trading is always more preferred. Here, friends, one can buy shares, make payment, and then hold the shares as long as you want it. So this really gives the flexibility to make more money. Then if we try to understand stock market, see, stock market or capital market, friends, always remember is a long-term source of investment. Remember, friends, it's a long-term source of investment, and here equity shares are the best financial asset classes in the long term to create wealth. Remember, friends, that in 1979, when Sensex was formed with a base figure of 100, today it is at 50,000. So in last 40 years, if you see, the CAGR return is 16.5%. It is a huge CAGR return, which basically the markets have been able to create. Remember, friends, stock market is the best possible way to create wealth. Not only that, friends, but basically it is also called as a barometer of Indian economy. So when basically we say that markets rise, economy has prospered, and when markets go down, we say that there is an issue related to economy. Remember one thing, friends, that economy and stock market are integrated, and basically economy is an independent variable, stock market is a dependent variable. The reason is that finally stock market is a reflection. So basically if the macroeconomic data of the economy is good, then automatically markets will react positively, and if the macroeconomic data is weak, markets will react negatively. For instance, if you see, Indian economy is relatively called as heaven of stability. The reason is that on a long-term basis, our average GDP growth is 7.5% as compared to world average of 2.5 to 3%. Here, friends, it is important to understand that basically, if you try to figure out, there has always been a trouble arising from US, Europe, China. If you see 2008 global financial crisis came from USA, 2011 European Union crisis came from Europe, and 2019 COVID-19 arrived from China. The reason, friends, that Indian economy has always been able to outperform and the surety that it will still do well in the future is basically because of these three vital parameters of our economy. The first is demographic dividend. See, demographic dividend basically means that 70% of our people are less than 35 years of age. So the average age of an Indian is 25 as compared to US 40, Japan 52, and Europe 47. So one thing is very clear, friends, that demographic dividend tends to play a critical and a vital role. Second is domestic consumption. See, domestic consumption means that whatever we manufacture 80% is consumed by our own people, and we are not an export dependent economy as in case of China and Japan, which are predominantly export oriented. Europe lives on tourism. And finally, friends, high savings rate. See, our economies, the culture of our people to save money is very vital. Our savings rate is 27% of GDP. World average is 21%. So this ensures that we are able to deal with any kind of external problems relatively with more ease and comfort as compared to foreign countries. Now, friends, always remember that once you have understood economy and you have a macroeconomic framework, in order to take the benefit of the situation, one has to invest. See, investment is very, very important because it's a process whereby in the long term, you are able to create more amount of wealth. So that is why investment is very, very vital and critical. Why one should invest, friends? See, these are the important parameters. To own a house, to have a car, child education, marriage of children, retirement planning, to beat inflation. These are all very, very important concepts which one has to keep it in mind. And all these objectives need huge amount of money, friends. So basically, in order to achieve huge amount of money, capital, one has to invest regularly. Remember, friends, that investment is a process, not an event. So it's not a one-time activity, but it's a continuous activity whereby small amount you keep on investing. So that finally turns out to be a huge corpus. If we talk of nominal and real return, friends, say for instance, FDs gives 8% return, so which is a nominal return, and suppose inflation is 6%, so your real rate of return will be only 2%. Remember, friends, that the reason why equity or mutual fund should be there in your portfolio is this also, that basically equity and mutual fund in the long term give nominal 15% return, whereas inflation is 5 to 6%. So even after post-inflation, your actual return will be around 9%. So that is something, friends, very critical. If we talk of instruments of investment, friends, then these are those investment instruments where one can make money. For instance, equity share, mutual fund, FD, Providend Fund, insurance, gold, and property. See, these are all vital instruments where a common man can invest and try to create capital for himself. So let us try to touch upon all this. Friends, as far as equity shares are concerned, see, they are always called as a source of wealth creation. Remember, friends, in the long term, nothing can beat equity markets because from 1979 till date, if you see, the CAGR return is 16.5%. Obviously, equity beats all other asset classes in the long term. In 1993, friends, had you invested only 9,000 rupees in Infosys IPO, then today it is more than 4 crores. So that is why, friends, equity share is very, very critical and important. Remember, friends, if equity share does well, obviously your ability to create wealth for yourself will go up like anything. Second is mutual funds. See, mutual funds are an indirect route to stock market. Here, friends, one has to understand that the average return from 1964 till 2020 is around 15% plus. So one thing is clear, friends, that even today, mutual funds can help you to create good wealth. But yes, one has to be a long-term investor. In mutual fund, one can do SIP, systematic investment plan, which really helps you to create wealth. And this SIP, friends, really is a game changer. As far as, friends, FDs are concerned, see, FDs are most popular source of investment, though they are basically traditional in nature. Remember, friends, that FD will really give you good return over a period of time, though it will not be able to beat stock market and mutual fund. But nevertheless, it should be there in your portfolio because it involves safety of capital and liquidity. One can break FD at any point of time and your capital is also safe. As far as, friends, Provident Fund is concerned, it has a lock-in period of 15 years. But even then, friends, this instrument is very vital because it is totally tax-free and interest rates are also higher as compared to others. So that is why Provident Fund is very, very critical and important. Remember, friends, that Provident Fund and FD, they can really help you to create a decent backup in times of market volatility. And at the same time, mutual fund or direct stock market helps you to create good amount of wealth. See, as far as gold is concerned, friends, see, gold is an important hedge against inflation. See, if we talk last 100 years data of gold, the return was 6%. Last 40 years, the return is 9 to 10%, and Sensex is 16.5. Today, friends, gold has become very critical. The reason is that it is most liquid asset after cash, and it has an inverse relationship with three things: stock market, macroeconomic data, and US economy. So whenever there is any problem in either of them, basically gold will always give you good return. As far as, friends, property market is concerned or real estate, it used to give very high returns between 2003 to 2013. But practically speaking, friends, today, if you see, real estate is no longer a valid investment because of two reasons. One, huge oversupply, and second, unrealistic pricing. So there is a high probability that your money may get blocked and then you may not be able to sell that particular property. So that is why, friends, when you invest in real estate, one should be very cautious enough. Finally, friends, conclusion is that one should invest keeping in mind the long-term objective. Wealth creation has to be done in long term, and equity as an asset class will always give you good return, friends. So with this, friends, I conclude my part of presentation, and now we can go for question answer session. So there should not be a problem, friends. Please feel free to put your questions through sir, or whatever means is possible. Yes.
Sir,
Yes, sir.
we are waiting for the questions. Sir, I'd
Sure.
like to ask a question. One is raised by one of the students of first year BMS. What do you mean by employees deposit link insurance scheme? Employees deposit link insurance?
So that is equity linked insurance scheme. ULIP it is. ULIP linked.
Yes, sir.
Yes. See, basically, ULIP is a product, sir, which has two components. One is an insurance and one is an investment. But typically in ULIP, what had happened was earlier that the charges, the mortality charges and the other charges were not told to the people who used to take that product. And the charges were as high as 30%. So basically, on the very first day when the investor is putting money, he would incur a loss. And that is where the problem comes into picture. So that is why this particular point is something very vital, which we need to keep it in mind. Remember, friends, that basically in the long term, ULIP product was not successful, and one should not mix insurance with investment. It is always better to keep both of them separately.
Sir, one of the question which is raised by one of the students, how far the COVID, the corona had affected
Yes.
the Indian market during the investment process, the stock market? Sir, I remember when my college visited you, you had rightly guided in the month of Feb 2020 that due to the corona, the market would be affected. Some examples we had cited of Jaipur, the foreigners, the tourists who visited to our country, they had a lot of problem, and there was a problem related to investment. Please guide on
Sir,
that.
during COVID-19, see, basically when in March 2020, when COVID-19 started, now our market simply crashed out from 42,273. That was our all-time high level to 25,600. And that too in a span of around 1 to 1.5 months. The reason was that time, because of COVID-19, foreign institutional investors, they turned out to be totally net sellers, and they sold shares worth 61,000 crore rupees in 30 days time. So the selling was so heavy that market simply crashed out, and that basically created a problem. Now, friends, when the foreigners saw that India has been able to implement lockdown very strictly, they were mighty impressed. And from May 2020, the same FIIs who were net sellers became buyers, and they went on buying large number of shares. In fact, 2020 became an year in which FIIs invested 1.68 lakh crore rupees in a span of 8 to 9 months. So friends, basically that shows that ultimately a lot of foreign institutional investors have confidence on Indian economy. Today, friends, if you see now, the markets are facing problem because of the three reasons. One, Russia-Ukraine war, second, US recession, and third, rising interest rates. So basically, from here onwards, if you see that what factors will decide the movement of the market, then these three factors play a very critical role. For instance, if Russia-Ukraine war stops, markets will rise. If US does not go into recession, that would be a very positive thing and markets will rise. And if interest rate starts reducing, so these three factors will definitely play a very critical and a vital role. Yes, sir. Yes. Any other question, doubt, difficulty, please feel free to put your questions. Don't hesitate. Friends, any doubt, difficulty, I'm here only to answer all your questions. Any particular thing you want to know, you want to ask, please feel free. Don't hesitate in anything. Friends, one important piece of advice that ultimately remember one thing, that investments are something which has to be done over a period of time. So the best possible asset allocation could be in equity as well as in debt also. So on one hand, when basically you start earning, one can do a mutual fund SIP, which could really help you to create wealth over a period of time without taking much of a risk. On the other hand, one can basically do FD or a Provident Fund that will help you to create good wealth also, because that will help you to create safe capital. The reason is that, friends, today markets are very volatile and the whole world economy has got integrated. So in such a scenario, it is always better to have a balanced portfolio whereby you have equity also and you have debt capital also. Apart from this, one very important thing is basically gold. See, you should always have gold in your portfolio, because if you have gold, obviously your probability to make losses is relatively less, because if equity markets don't perform, gold will surely perform. So that is how you need to basically bifurcate it. Remember, friends, finally, when you are investing, this particular concept is very, very critical and important. The reason is that today it is vital to have a portfolio keeping in mind the global macroeconomic situation. See, though we did not have anything directly doing with Russia-Ukraine war, but because of that war, world over, there was energy prices went up, crude oil went up, and in India, we had 100 rupee plus petrol and diesel. That actually affected the economy in a huge negative way. Inflation went up, and ultimately there was a lot of pressure in the economy. So, friends, one thing is very clear, that one needs to keep this particular angle in mind. Yes, friends, any doubt, difficulty, or shall we call it a day? So friends, thank you very much for giving me this opportunity. I'm really grateful to S.S.T College of Commerce for organizing this particular session. I hope the session has been useful to all of you who got knowledge about how to invest, how to make money investing in equity and other asset classes. Friends, remember one thing, again, I will tell you that investment is finally something one has to do very cautiously, because then only you will be able to make good wealth. And secondly, it's a long-term approach, not a short-term one. So with this, I would conclude the session. Thank you very much, friends.